Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It is May 12th, and this will be our chart lesson for today. And this is going to wrap up our week. As you know, we don't do any chart lessons on Fridays anymore, so um, we'll wrap it up today, and we'll be back again Monday. But just looking at today's daily chart with our envelope bands on here, you can see we're still severely oversold here. It looked like early we were going to finally get a bounce here. Notice we traded way down here, but we closed really almost, and really you might say, because we probably should have adjusted this for those last couple of closes, probably right there, because we still get most of the touches across there and using that close. And that gives us a close back inside the measured move, so maybe that's more realistic. There's also the idea of looking at this leg and then a possible measured leg. We're real close on that one too. We didn't quite get there. I'm still leaning towards this being the measured move, and we closed, even if you came back a little bit and just put your closes right along there, that really looks, I think that's where I had it before. That really looks accurate. And we have closed, and we did close slightly below that, but that's close enough to say, hey, maybe we got a measured move there. Excuse me, I'm having a little throat trouble there. Uh, but anyway, we'll see what tomorrow brings. But once again, early on, it looks like we're going to rally out of here, and the selling just comes back, and they beat it down and take it to a new low. And they did that again today, although we closed, or you can see yesterday, it looked kind of like a capitulation day, and today it looks. This is still a reversal type bar, but it's not super bullish. It did close in its upper half, so there's something positive to it. Well, we'll just have to see. I mean, it's just hard to say where we're going if we're still done. If we're done to the downside, I'm expecting a bounce any day now. And of course, I've been expecting one, but it was my opinion we were going to at least test this low here. And even if we get a bounce, it doesn't mean the sell-off is over. It just, you would expect some support here, and at the very least some sideways action maybe before it goes lower. If it continues to go lower, that means this thing's super weak. And as I showed you before, it could be that there's a full channel here, meaning we're going to move this distance one more time, and so that would put the lows down here close to 3,700. So that's still a possibility. I wouldn't write that off yet. Until we start rallying higher, we've got a couple other targets here prices could be shooting for. And if you go all the way over, I mean, we've already made a new low for this contract. So there's nothing else down here to compare it to unless we go to maybe a much bigger chart than a daily chart. We'd probably have to go to a monthly or a yearly chart, quarterly chart or something like that. So, and I'm not going to fool with that yet, but my hope is that we've found some support and some traction here, and maybe we'll bounce and go higher. We'll see. But anyway, that's what I see. The way I'm seeing it, it's possible we're going to make a new low here and bounce out of here, or at least get a correction. But we could be headed, and if we're headed to this target, we still need a little downward movement, although that's close enough to call that a success. So, especially on a daily chart. But we'll see. We could be headed down here, and we could be headed even lower. I mean, I'm just giving you the targets, the near-term targets. So, and they're usually fairly accurate, at least for a short-term target. Like I said, we could bounce here for a day or two, or just for a day, and then turn down again. So, but you would expect to find some support here, and so far it looks like we did. And that may be all we get. We may chop along here a bar or two or a day or two, because this is the daily chart, and then we could go lower again. So we'll see. Let's flip over to the intraday chart, and you can kind of see how hectic and there's just not much direction in the market now. We're so oversold, but nobody seems to want to buy this thing. At least not. We can't get any follow-through buying is the problem. We get some bounces and some rallies, but there's never any follow-through. And that's not a good sign. Until we get some follow-through, they're just corrections in a bigger downtrend. That's the way we have to look at them. So, but anyway, let's flip over to the 2002. Okay, here it is. It's not a very pretty sight, but you can see we got a couple of legs up. We missed that target by a little bit, and then of course that usually leads to a bigger move down. And then we got 2 legs down. Of course, we missed that by a small amount too, and then we got the bigger rally up. And really, it looks like we may already have, we're close to having 2 legs up again. So, and you can see we did sell off there fairly strongly. So that's, I mean, again, it's just kind of a sideways day with a downward bias. We've had several of those lately. And that's kind of what it looks like. I mean, we're just up and then down and then up and then down, and very similar to what we had yesterday, except yesterday we closed down. At least today, we still closed off yesterday's. We still closed down from yesterday, but we closed very high off the low of the day. Where here we barely closed off the low of the day. Here we just kind of closed neutral. So, but we continue to kind of get these sideways days, and you can see it there. But let's zoom in and go through the trades. Quite a few of them today. But let's go through the trades and we'll wrap this day up. I'm going to zoom on in here so we can see something here. And you can see 7 o'clock kind of came off this rally, off this little bounce here. I wouldn't call that a rally, but just a bounce. And then we're just kind of chopping sideways. We have a little short-term range here. Originally, I had this kind of marked like this, but you can see once it moved to measured move, I just expanded the range, and that was, and it's just a bigger range. This was just the midline, what we were originally getting, but that's how I had it originally. So there's a triple test right there, and you can also call that a second entry short. Really good bearish bar, so I like that one. I marked it green, but you could argue for this to be red. I mean, it's real close. So just when you're going sideways like that, you can't really count on the second entries. So really the only way you could play this would be a range play and a triple test and maybe a lower high off the range high. So, I mean, again, you could almost argue for that to be red. So it's real close. Of course, finally we bounce and we make the measured move up, and it just turns out we're in a bigger range here. This one's very tempting. That far away from the EMA, you could argue for it to be green too, but I'd probably wait on the lower high, which comes here, and that's just too congested, right in the midline, right in the EMA. Look, when you're trading a range, the idea is to go short up here and to go long down here. And anything in the middle can be suspect, because you can see here it kind of chops back and forth before, and you would expect it to come down here, but instead it goes back up here. It tried to come down here, but there's some buying. And really what prices were doing, if you look at the bigger range, prices were overdue to come back over here. So that's really what's going on there. Prices are working back to this trend line. And so they couldn't really rally strongly to get back, so they just kind of chop sideways until they get there, and then you get this big sell-off. And the only reason I marked this one red is because it's right at the key entry point. And you could argue again that we have a triple test here. We tried to go higher right there, and you can kind of see the support resistance. We had some other resistance over here too, but at the very least you can call that a double top at the key entry point. But you could argue that, hey, we probably got a triple test here. It's a relatively bearish bar, way away from the EMA, so I think that one's worth risking. I like that trade. If we'd got a little better signal bar, I'd definitely say go short here on a triple test. But that signal bar is kind of iffy, and that turns out to be a great trade. But it is outside the key entry point too. And notice we came up a little short here. That's showing you a little bit of strength, even though we're mostly sideways back to the other side. But that's showing a little strength, so we could get a break over here, which we do, before it takes off lower. And then notice we drop down, you get a first entry, there's technically there's a second entry here, and then you kind of chop back up here, but this is a second entry short. This is really a double bottom here, and then you get a first entry, second entry, and that's such a nice signal bar. And you got this short-term channel coming down. You're probably going to retest that low at a minimum, and we might go all the way back to the other side. So I like entering there. It's a very good signal bar, and it's clearly two legs up. You can see that first entry, second entry, and I like that one, especially with that great signal bar. So, and it almost really, you could almost, because that's all that is still part of one leg down. So to me, it also looks like a second entry long that fails. Although you already turned down, really the failure would have been here, and you couldn't really enter there. So you need to wait on that second entry. But just something to think about there to add to that. This thing drops on down, and that's a really nice move, and you'll get a runner on. And if you could have entered on the engulfing bar here, or you could wait here. I like that trade either way. Let's just say you wait till enter one tick below here. I mean, really till you get your first break higher, you get almost a 13-point move. That's a nice runner, especially by 8:30 at the 8:35 in the morning. Because if you catch these two trades, you're probably done, and you probably get a runner on both of them. So that's my kind of trading right there. Get your two trades in, get a runner on both of them, and actually beat your, get more than your target for the day, and call it a day. And you got, basically you come in here and work an hour and a half, you're done. If you started at 7, you work an hour and a half, you're done, and now you got the rest of your day to do whatever. And that's the way you want to trade every day. That should be your goal. But anyway, we drop on down, and then we're bouncing and going higher again here. I just don't see any. I think it's too early to try to look for a long. We do have a break and a new low, and there is a reversal here, but it's just not a very good one. I mean, there's 25 ticks in that bar. There's a lot of congestion. I think you just have to wait. And then you do get a second entry here, but the signal bar is no good. And then there's one more little push down, so you could look at that as a high or low. But even if you trade that as an engulfing bar, you're looking at 29 or 30 ticks, and it's a lot of sideways. I just think it's better to wait. And of course it runs up, and you get a lower high here. You do have a break in new high, and you do have this channel coming down. But again, that you've got 4 bars or so stacked sideways. One of them has no body. Just wait. I mean, it's just a lower. I mean, you might say that's a lower high, but prices have really moved too far to call that a lower high. And we're just right at the EMA. This thing could fail easily on you, which it does shoot down and then fail quickly and turn against you, but you would have got your scalp out of it. And then I didn't mark this one either, because now you got a first entry, second entry, but you're looking. You are looking for prices to go lower. So, maybe you take this trade because there is a close outside. It's just not very convincing. And so I didn't mark this one, but this is a trade that you may take. If you've got enough room right there between where you enter and that EMA, yeah, maybe you take that trade. I didn't mark it, but because it looked like we were going to try to make another leg up there, and you could get trapped. But you can clearly see you had an overshoot of this green channel, a new low, or a break on the other side, and then a move to a new high. And then so we're set up that we could go lower again. That's just not a very convincing close outside this channel right here. But that turns out to be another great move. But as you can see, then a few minutes later, you get a second entry short, and now you're trending lower. You do get a close outside this one, a new high. Fairly bearish bar. It's not perfect, but it's good enough, and that's the better trade. And it doesn't quite move quite as far as this and fast as this one did, but that's still the better trade to wait on. And then we just wait a few minutes later, you get another second entry with a big bearish signal bar. This one, it only ends up moving about 2 points, and then it reverses. So prices were wanting to reverse. The selling was still just really tough. So, but you can see those second entries, they very rarely don't get their scalp, and that's why you want to take them. Uh, and two, this is not a strong downtrend now, because the strong downtrend is kind of played out, and this almost looks like sideways stuff with still a downward bias, and that's the way I would categorize that, as being mostly sideways but with a little downward bias. But we would do reverse here. I don't see anything that would interest me in. You might say there's a failure here, but look how sideways that is, and you're still really in a got a downward bias there somewhat. So I think you just have to wait. I don't see anything there, but suddenly we're rocketing up, and you just don't really get a chance to enter up here once it's moving on. But if you just wait, then you get a first entry, second entry. That's the first break of that green one. That's a quick, easy move. No, we don't have a close outside this channel yet, but there's enough room back to that trend line. And with this nice momentum here, you'll probably get a scalp out of that. And you can see we did push up, but the price action played out perfectly. It came back, made a new low, and then went higher. And notice what happens here. You get a first entry, try to go higher, you get a second entry. And so now you got a second entry short. I like going long there. Somebody, I think, asked me about going long right here. They took this as a higher low. I mean, that's just really questionable to try to take that as a higher low. The problem is you're going long right into the swing high there at the point, and really you don't have a trap there or anything. You may not, you're still making lower highs and lower lows, so really you need to wait on a trap, which would be a failure or and a reversal or something like that. And that's what you get here. And you can see then it takes off. But most of your better traders are not going to enter on that trade. It's just basically what they did is they couldn't take it higher, and so it just runs back down, runs all the stops, probably sucks in some more shorts on a second entry short there. And if you did take a second entry short, you still got out of that. So that's another possibility, that you took another short, because sometimes you'll get two legs down. So I was looking for the long here, so I didn't really look at that as a second entry short, but you can't argue that. So it is right above the EMA, but that doesn't always matter. Not when the market's trending. And this has been a downward bias, and you do have a couple of legs up, although I think this was really considered the first leg, and then you get another leg later. But so you might take that short. And then, but I like the reversal. And if you take that reversal, you probably get a runner. Runs on up. And then we're just chopping back down again. And I don't see anything in here I like. There is a reversal there, but it doesn't set up properly. Just ignore that. And I marked this one. There's a hidden second entry. If you went to a little smaller chart, you'd clearly see a second entry short right here when this breaks lower. But on this chart, it's just first entry. If you don't understand what a hidden second entry is, it's too advanced. It's probably too advanced for you. Don't worry too much about it. But you can clearly see you get a leg up, a move down, and a second leg up, and then prices turn down again. And if you went to a slightly smaller chart, you would see a leg up, a first entry, a second leg up, and a second entry. So it's what you call a hidden second entry on this chart, but that's much more advanced. So again, don't put a lot of thought into that if it doesn't make sense to you. You'll just confuse yourself. So, but anyway, it breaks higher here first and then turns down. So you could enter that on the engulfing bar, or you could wait till this closes. I don't think I'd wait till this closes, because there's not much room left, and that's a huge bar. 40 ticks. I mean, that's not worth risking it with only that much room to go. It ends up not mattering, and we end up even getting another hidden second entry and going even lower, but I would just be real careful of that. So anyway, the additional second entry here is another hidden second entry, so it's like a little repeat pattern, and this time you get a reasonable bar. That one's only 17 ticks, but you've already got a break in new low, so maybe you take that one. The odds are we're probably coming back to test this support, so it's another one you may take. Again, it's a hidden second entry, so you got to be careful with it. But But when you see them back to back and it's kind of a repeat pattern, they're probably going to play out the same way, which they pretty much make the same move almost. So, and then we bounce there, and we really bounced there way back over here. So and although that's spread out pretty good, that's not a very big time frame. That's like 9:09 to 9:30, so that's not, maybe 20 minutes or so. But you got a triple test there, although there's no setup, but it comes back right here and bounces again and gives you another setup. So I think you got plenty there to take that as a higher low. You got plenty of room back to the EMA, which when you're going sideways, you don't worry as much about the EMA, but we did turn down off of it a few times right there. So I think you have to take it into account, and you need enough room before you get to that. And I just think that next bounce with a good signal bar was enough to get a little interest, and you can see it kind of takes off there. And even though it didn't continue, you get enough there to get a runner too as well. So you get almost 13 points there. That's a pretty good move. We come back and test it again, but this time you don't really have enough room there. If it would have broke above this bar, maybe you take this trade, but when this one ends up as a matching high and an inside bar, then you get another one. I don't think you can enter there. So you got to wait on something better than that. Then you get a first entry and a second entry and a failure. So the entry would be one tick above this bar because that's where the failure occurs if you want to take that. And so, but your signal bar goes below this, your safety stop goes below this bar. So that's technically your signal bar. So I mark it there, but you enter one tick above the green bar. And not because it's green, but because that's where the prices break higher and the failure occurs. And again, this is one of those where you need enough room to scalp out before the highs because you've got some resistance across there you can see. So if you don't have room here, don't take this trade. And I almost made this one green, but my guess is that's going to trap people. And you can see the smart traders came in. You get a higher low here, but that's too far to trade as a higher low. So I get a lot of questions lately because we've had a lot of higher lows. But if you're not a skilled chart reader, be careful with the higher lows. Just watch them for now, because I keep getting all these people sending me higher low questions, and they're just losers. So you're just, you don't, if that's the case, you don't quite understand them yet. And so just wait. With time and experience, it'll come to you, and just watch them for now and learn from them, study them. That's how you learn this stuff. Just because you see me mark a trade and say, okay, this is it, and then you see something that looks just like it and you take it and it doesn't work, it's because we're not pattern traders. It's because we're chart readers. And there's a lot of nuances to this, just like I talked about this trade here. That's another bounce with a nice signal bar, but prices have been struggling at that EMA, so you need room to get out. It didn't matter, but you can see in a lot of cases it would have mattered. And then here, you got a lot of resistance right across there, so you got to make sure you got room. Again, it didn't matter, but the first time you take that trade and it goes up 2 or 3 ticks and hits that resistance and turns down, you'll be asking me why it failed. And that's why, because it couldn't get through the resistance. And you can clearly see, maybe you can't clearly see it. Let me draw the line, and then you can clearly see it. And you can see the resistance that we're finding there. So make sure you got enough room there before that last swing. And because you could get caught on. You can see once we broke through it, pulled back and tested it, and then went higher. So that's a little breakout pullback entry, but I wouldn't take that trade because it's too far away from the EMA. You're going high, long, right into the highs, and you can see it would have worked, but it didn't go far before it's coming back and going sideways. And that's because it's just not a very good setup, and there's still some selling going on. So anyway, we move on up. You pull back, you get a second entry here, but that's a double top, and that looks, this is the first break of the trend line. So I'd treat that like one leg down, and then you get a first entry, and then you get a second entry there. And that's also a higher low. I still marked it green because technically you got a channel down there, and that's your first break, and we didn't get a new low. That doesn't necessarily always matter. But with this having a lot of stems and sideways stuff, you got to be careful with that one. So I marked it green. I like it though, I'll be honest with you, but it's not a perfect setup, so wait on something better. unless you want to be trading aggressively. And if you do trade aggressively, if you're a good enough chart reader, that's great. But even then, you're going to have some losers. But if you're a good enough chart reader, you're going to catch enough big moves like this that it probably makes up for it, or more than compensates for it. But if you're not a good chart reader, then you're going to get burned a lot. And so skip these. Wait on the sure things. But anyway, you get your break, 2 legs up, and guess what? You're moving lower again. And you get a move down first entry, a second leg down, a second entry, and it fails. And this actually breaks higher on that bullish bar and then turns down. That's a great trap on a failed second entry long. I like going short. You could do that again. I don't know if I'd wait for this one to go short because look how much room you got before that low. It could fail on you. So you just about have to take this as an engulfing bar or skip it. You'd be taking a little more risk to go short right there. And then we're just chopping sideways here. There is another second entry here, but the signal bar is not good enough. Notice the new low, first entry, and it comes back, and we pretty much confirmed that. If it would have closed bearish like this, I'd say go short there, but it didn't. We drop down, and we're just chopping sideways, and we get a failed breakout and then a lower high. Notice how that breaks higher and turns down. It's just a break out of this, plus it's the first break of the yellow channel, so there's a lot of reasons to be considering short. That is a little sideways, but with that being the key entry point, prices are probably going to make a new low here. We're going sideways because they're struggling to go higher, and the buying just hadn't subsided. When you get that higher low, you can see that they got them trapped when it broke higher and turned down, because look how that shoots straight down. That's a sure sign of a trap. There's another move higher here, but you can't go short right there. The signal bar is no good. Just drops on down. There's nothing else I see down here. We've gotten way too far away from the EMA, and then of course we bounce off the low end and we start working back, and you do get a close outside here, and there's no setup to go short there. You don't want to take that short. I'd wait on second entry or a failure or something here, and because even though this would have worked, you see it's not done to the upside. It tries to go higher one more time and turns down. There's no setup there or anything, but then you get a triple test down here, and you've had a break and new low. You've moved a perfect, actually that's not a measured move. You would actually be looking more like this, and you can see we still have moved a measured move. This is, I traded this as one leg and to find this next leg, but there's 2 legs in that. And usually this little double move here is going to be the center of the pattern, and you can see that's what you got there. And then you get this triple test with a nice signal bar. The only reason I made this one green instead of red was because it's right into the EMA. And you got to be careful with that here, because this is, even though if it's sideways you don't worry about it as much, and this is a little sideways, but the overall we're still in a downtrend. We haven't made a new low yet, so you got to be a little careful. If you had plenty of room back that EMA, I'd probably make that blue. But you rise up. Actually, I take that back. You do have your new low in, but you still have to be careful because of the fact that we're in a downtrend and you're trying to go long, and we could get another move down. So I think I said that we didn't have a new low yet, but we do. So I don't want to confuse people, because we do have a break and new low. But you move up, first entry, move up, second entry that fails. If we break higher here, we're going higher. And you can see really you go long one tick above this bar, because that's where the failure occurs. But again, this makes the swing low, so that's your signal bar. But your entry is one tick above that bar. So as soon as that bar closes, put your buy stop above it if you like. And again, reversals are very advanced. If you're new to this, don't take these trades, because you'll just get beat up and you'll be wondering what's going on. You need to know what you're doing on those. You need to know what you're doing, period. But it's so much easier if you just stay with the trend and take the sure things, and then trade the ranges, buying the lows and selling the highs. And remember, if you trade down into a range like this, then your bias is going to be to look for shorts. unless you've made a measured move and maybe putting in a bottom, then you might trade it both ways. But generally your bias is the way you trade it into the range. So if you trade it down into this range, you still got a kind of a downward bias. So we move up, we get a break, new high, and we do get a triple test here that would have been a nice short, but and it's also a second entry, but the signal bar doesn't qualify. We drop on down, and then we're just kind of going sideways. We break out, turns down right off the key entry point, but again, your signal bar is no good. But this time you get a lower high, and everything closes right below the EMA. And even if you're going to bounce here, you got plenty of room. So this is the one you want to take. Then it comes back on a failure here. So if it breaks lower there, it's a failure. But the problem is that's a lot of congestion there. We did push through here and come back. So there's a good chance you could go lower. But you can see it does go lower, but it really struggles first. So that one you got to be real careful with. But it still kind of fits our entry criteria, and you could take it really if you wanted to. And then finally you get a close outside here, and you move to a new low, and you come back and you get a lower high, and that's a really bearish bar. And a lot of times you'll get two legs, so you may take that one. That's moved a little bit far for my taste to really consider that a lower high. But there's some reason, but there is room to get out on this one at least. And it's very bearish, and it is right off the key entry point, and that's the first break, and a lot of times you get two legs, so you may take that one. And we drop on down, and then we're just going lower. And here's another lower high. Notice we get a correction, you get a break. There's really two legs up there. It's not a second entry up here because your second entry comes right there. And if you got to be real careful here. This is just looking like sideways stuff, and you get a little breakout, but I'd wait on a lower high, and it comes right here, and it's a pretty good signal bar. But the problem is you got all those matching lows, and it's not very far from that low. So that's the reason I drew this arrow, just so I could remember to talk about it. That's a lower high, and that's a pretty good signal bar, but that's not a very good setup for the reasons I just told you. You've moved a little bit far. You'd probably want this lower high to be more up here. You don't want three matching lows because that's showing some strong support there. You got other support right across there. Sometimes it helps to draw these lines. I suggest that everybody draw their lines just because I don't. I've been doing this so long I can see it, but most of you need to be drawing these lines. So you can see that support there. You don't want to go short into that. You see how that bar fails? It ended up pushing lower, but it doesn't go very far before it fails. And sometimes it'll push like that and fail, and you get stopped out. So that's why we don't take those trades. And you can see that support still working across there. And so it's dangerous going short into that. And finally we drop on down, and that's why I don't like this, any of these setups right here. We drop down into this range, and we're just chopping sideways, and we are making higher highs and higher lows here, so we've got a little upward bias, even though we're still, you can see how flat the EMA is. I just don't see anything in there I like. And it does reverse, and there's no reversal setup that I really like there either. And you have to come all the way up here before you get a hidden second entry long. And we're not quite back to the EMA, but that's a really strong move up, and that's the first break. So we're probably going to put in a new high. So maybe you take that trade. I'd probably skip it. I'm not crazy about it. And notice we make two legs up to a new high, and then boom. And that's perfect price action, really. So just pay attention to that. But anyway, there it is today. And we're at 34 minutes worth here, so I'm going to wrap this one up. There's a lot of stuff going on this chart. This is, unless you're trading these channels, these trend channels, this is not easy trading, especially when it starts chopping up and down. So that's where you want to be careful. If you're new to this, stick to the basics. Find the key entry points, which are the trend lines, and wait for the setups at the trend line. So there's plenty of them there. There's so many trades here today. Yeah, you might have to wait half the day, but if you wait half the day, you'll have success versus trying to You know, if you're coming in here and trying to trade for an hour and that's all you got and you're forcing trades, you're not going to be very successful. Don't do that. If you come in and you only got a hour to trade and you don't get a setup, then trade your hour and you don't get a trade and go home with your money. Don't don't be a donator. You've heard me say that before. The market needs donators. If there weren't for donators, you couldn't make money at this. So you need donators. But I don't want any of you guys to be the donators. And the way you do that is by not forcing trades, not pressing trades, taking only the sure things that are at the key entry point, that are probably second entries, easy to see stuff, or trading the ranges where it's clear support that's tested multiple times or clear resistance that's tested multiple times, and you get a good signal bar that's not a new high on a short or a new low on a long. Sometimes you want to risk those new highs, a short on a new high on a breakout of a range, or a new low on the breakout of a range, because oftentimes those will be important lows for the day and might even be the low or high of the day. Hopefully that makes sense, as I'm not really talking about it. But say this range right here, and you get this breakout. If you had a good signal bar, maybe you take that short because it might be an important high, and we might just continue lower from there. In a lot of cases, you'll get a failed breakout down here, and then it rockets up out of there, and it turns out to be an important low for the day. So sometimes those are very good setups, so pay attention to them. But this thing's getting longer and longer, so I'm going to shut my mouth and I'm going to wrap it up. Hope you had a good week. I'm done for the day. We're done for the week. We'll be back Monday. And I'm going to wrap it up. So this is Mac with PriceActionTradingSystem.com, and we'll see you next time.